Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades to take you through. Rick Ducat will take us through the charts, and here to take us through the trades is Scott Bauer, the CEO of Prosper Trading Academy. Great to have you both with us. As always, Scott, welcome back to the program. Let's kick it off with your first trade here. Quantum Computing, which had a really impressive week last week, had some good news out of its investor conference, had another oversubscribed private placement announcement that was really well received. Now this morning, I'm not sure if you picked it before or after we saw this, but major move to the downside, more than 10% on another oversubscribed private placement, this time $750 million. Walk us through this pick.
Exactly. And so when we see these, companies come out and they issue additional shares or, a situation like here, we do see the stock go down typically because people are getting diluted. The fact that this is another oversubscribed private placement, this move to the downside doesn't necessarily seem appropriate to me. And I think that quantum computing in general, not just this stock, but quantum computing right now is very, very hot. The sector is very hot. This is a company that obviously has a lot of retail interest to it. So on this little pullback here, I really like the opportunity to get in. In fact, there's a small gap area in this stock here, and I'm looking at my chart here, right around the 20.5 to 21 area or so. So I think there's very, very limited downside here. So what I'm doing is I'm buying the October 31st, going out a few weeks, the 22.26 call spread, $4 wide, paying $1.10 for that. That's my risk if this thing doesn't pop back here. I think we see back up that 26, 27 area here pretty quickly.
All right, we know you love a buy the dip scenario here. So, Rick, we've talked a lot about quantum computing, not just quantum computing, the company itself, but just quantum on the whole, the industry with Rigetti and D-Wave and quantum computing. What is the chart telling us?
Well, here's that small area that Scott was discussing, that little gap there near about 20.5 to 21. And I noticed that today's lows were consistent with the previous session. So we haven't filled the gap. We haven't broken below our relative lows. Price did stop at an area that stood out here. This area, our red line here, comes in at 25.68. Why? Because that's our old high close. So we stopped short right around that point here, seeing a brief pullback. If we were to backtrack even further, we saw this bull pennant type of price behavior where we had a big push to the upside, a retreat back to an old low point here, and then eventually a push beyond the original highs here. So we can see as well now, if we were to add our other studies, that our RSI, our measure of momentum, trending downwards still in an increasingly narrowing range in this triangular shape here. So look for RSI to break out in tandem with price, either way, for further confirmation of a directional move here. Our 21-day exponential moving average is fairly close to our short-term white trend line here. That comes in right around 1940 or so, 19. So that would be one other downside area to potentially consider here. Finally, if we were to look at our standard deviation channels and volume profile study, the big volume area is right here in the middle, right around 18, also quite close to our linear regression line. It contains our moving averages here. So between about 1650 to 20, I know that's a kind of a bigger range, but that's where all the heavy trading activity is. That's the point of great congestion here. Notice as well that our recent highs lined up quite closely with our +1 standard deviation channel. So by its own relative price history, it was a rather extreme move. That would be one area to consider also going forward. Finally, if we look at our 5-year chart here, just one point, our old high all the way back there, 2507. That's about where we are once again here. So kind of an interesting point that we're at right now. Really interesting, kind of funny chart too. Pretty much just straight up.
Yeah, just straight up there over on that side. Shares trading right about $22 right now, despite the move to the downside today, still up about 239% over the last 6 months. So quantum computing on the industry and for the company itself doing really well right now. But Scott, let's move on to your next one, Costco. Are we bullish or are we bearish on Costco?
I am mildly bullish. When I say mildly bullish, it's because I'm not looking necessarily for a big move back to the upside, back to where we came from. But I think that we're at a real interesting spot in the stock here where there's some really major support just below where we're trading. So what I'm really looking for is kind of that line in the sand, buyers coming in here. And again, not necessarily an explosive move to the upside. Volatility for Costco is actually has increased quite a bit here. So when we look at option premium for Costco, it's fairly expensive. So what I'm doing here is I'm selling a put spread. So rather than, again, looking for that massive move to the upside, I'm looking more for kind of that line in the sand. So I'm selling next week's 910, 900 put spread. That is slightly in the money already with Costco trading 907-ish or so, but that's okay. I can collect about $4.50 for this. If Costco just continues lower, if there's, just no bounce, no kind of safety net at all, the max this could be worth is $10. I know what my risk is. $10 spread minus the $4.50 I collect. So my risk is $5.50. But I love the opportunity here to see Costco just either remain right here or just kind of grind itself back a little bit higher.
All right, Rick, what does the chart tell us? Do we see any potential areas where we might see that bounce that Scott was talking about?
Well, if you were to look for a near-term area, that would be about what stands out to me as well. 903.29 was our low point there. We've held on around that level a couple times so far. So that would be, the area to look out for a further downswing. If we do break lower, 890, if we were to go back here, that's about the site of our worst close. So we did have intraday fluctuations all around, but that was the closing price that marked the low point for that price activity. But now we can see here that we are trending downward. We have our short-term blue trend line still in play here. We have a gap to the upside. Right about here, 935.62 is where price would fill that gap as well. So that would be a kind of a simple range to consider here, roughly 903 to roughly 935, 936 or so. So when we look at our moving averages here, we can see that the faster 21-day is crossing below the slower 252-day here. These aren't really particularly good trading signals, but they're an easy visual clue about which way the trend is going here. They are lagging indicators, so that's why they're not the greatest signals. By the time they're showing that movement, it's kind of already underway at this point. So that's why we look for the faster ones to start changing slope instead. When they start going from up to down, that's perhaps another sign of potential trend change here. Nevertheless, we can see that the two moving averages are in confluence here, right about at that same resistance level here. So even more emphasis on that as a potential target to break through. RSI still trending downward, just a hair above that oversold area, push below 30, and a push below the 903 level in tandem would be more of a bearish outlook here for the activity. Finally, when we look at volume, we can see here that our node comes in near 890, excuse me. That's also our -2 standard deviation channel. It's also our old lows, so an important area there. Volume picks up quite heavily once again near that 935 level. So those are really once again the key areas to the upside to be on the lookout for, this heavy congestion area where all our indicators are lining up.
And Costco had a really strong earnings for a retailer in the retail space in its most recent report, but shares still under a little bit of pressure year to date, down less than 1%, so underperforming the market on the whole. This next one here stays in that same space, Scott, but has had quite a few headlines in recent days. We're talking about Starbucks, a lot of store closures, a lot of layoffs, announcing they're increasing their dividend. Any of that have to do with this pick or just some of the downward movement?
It's more the downward movement. I am taking all of the news that we've heard over the last several weeks into consideration here. And I look at this chart and it's very similar to me as the Costco chart. Not necessarily looking for a big, massive, recovery move to the upside, but something where there is a lot of support, technical support in the stock, kind of right below where we're trading now. Implied volatility is elevated in Starbucks, which makes option premium, more expensive. So I'm putting on the same type of strategy as we just talked about in Costco, where I'm selling a put spread. This one, I'm actually giving it a little bit more time, where Costco was next week's options. This one, I'm going out to October 31st, end of the month, and I'm going to sell the 85.80 put spread. That can be done right now for about $2.30. Optimally, I'd love to get $2.50 for that. My break even on this at October 31st expiration would be 82.5. So I really like this. Again, a lot of the same reasons for Costco. So much of the news that has been out over the last several weeks, the street, the marketplace took that as bearish, and yet the stock, to me, is really hanging in at some pretty critical levels here.
All right, Rick, so right now trading at 83.08, down almost 4% so far today. You know, Scott says we've got some technical support right below where we're trading. What levels are we seeing that at?
Yeah, about our low of today, 82.67. If we were to backtrack, that was this area right here, our gap here. So that's about where we bottomed out today. That's about where we bottomed out a few times recently. We did have a dip below that point. If we were to draw a trend line up from that low point, that gives us that very small, very short-term blue channel. We have broken through that now, and we are testing the old support. So, you know, these patterns, they can be short-term, they can be long-term here. The shorter term, the less reliable it is. The more times that the price touches against the trend line, the more important it is that it's breached. So this is not super important here because of its scale and time horizon, but still, nonetheless, a break from the trend here and a retreat back to prior support. The $80 level here also stands out. We did have quite a bit of fluctuation below that point, but if you look where price closed, that's about where things settled down most days here during this tumultuous period. So now we can see that our longer term trend line, our white trend line starting with these highs, you could draw it going across these highs, and that's about where we topped out recently here. So that's also another point to consider. When we look at our moving averages, we have given up our yellow 21-day EMA. All of our moving averages are trending downward. They are diverging farther apart from each other, which suggests the trend is continuing to accelerate. Downward breakout from the RSI here, below the 50 midline as well. So the bulls would certainly be hoping for price to find a bit of a foothold here around this level. We are at a big support level, though. You can see here when we throw on our volume profile study, the point of control is right around where we are now, near 84 here. So this is the really heavy trading area. Below, there's not too terribly much to break our fall if we start moving lower. To the upside, the 90 level. Double top highs there, and also the volume starts to pick up here once again near 92. Quick glance at a long-term chart as well. You can see that we are kind of near the low point here that we established previously. The heavier volume area to the downside would come in near 77.50 on a long-term scale. Could be something else worth considering if things keep falling.
All right, and right now trading at 83.13 on that longer-term sample trade from Scott. I want to thank you both, Rick Ducat, for breaking down the charts for us today. Scott Bauer for your 3 picks for our big 3. Thank you both again.